If you've caught yourself asking, is 2026 a good time to buy a home? Well, you're asking the right question at the right moment. And my thoughts are, yeah. So, with key shifts in inventory, mortgage rate signals, and long term wealth trends, 2026 is looking like a strategic opportunity for buyers. But you don't need to take my word for it. Here are 3 data backed reasons why buying real estate in 2026 makes sense for buyers who are ready for long term thinking, not treating their home like an ATM. Number 1, appreciation. Real estate remains one of the most reliable ways to build long-term wealth. Across decades of data, and a fun fact, homes roughly double in value every 18 years. Now, it doesn't mean you need to stay in your home 18 years, but that's a good number to run off of. Long-term appreciation within real estate is a consistent trend, even throughout ups and downs in the economy, because it's driven by population. And this pattern holds true for Central Texas as well, because it's driven by population growth and strong demand. Owning a home acts as a hedge against inflation. With a fixed rate mortgage, your principal and your interest payment stays constant while the real value of money changes over time. You can refinance if rates improve, but your payment won't go up if rates rise. Now, your property taxes and your homeowner's insurance can go up. I see the comment about people being tired of paying somebody else's mortgage in their rental payment all the time. But when you own a home, every payment you make builds equity in a tangible asset that you can live in, rent out later, or sell. Now, I don't know if you've seen this statistic, but there's a statistic out there that says that people who own their home have 40 times more wealth than a renter at the end of their life. Now, from an investment perspective, real estate offers multiple levers. Principal reduction through mortgage paydown, appreciation over time, rental income if you choose for it to become an investment property, and potential tax advantages depending on your situation. That flexibility is rare in other asset classes. Number 2, now buyers, guess what? Inventory is back again, and that is a big deal for buying power. During the height of the market, many Central Texas markets dipped into an extreme seller market territory with inventory levels that were close to 0.6 months of inventory. That meant very few homes and intense competition. But today, housing inventory nationwide and locally has shifted closer to 6 months of supply. But today, things are looking a little bit better for buyers because we are hovering around 6 months of inventory. And what that means for you is that you get to choose and you don't have to overpay to win a bid. You can pick a house you really like, not just one that you're putting up with. And because there's more homes on the market, that also means more negotiating power. You can negotiate on price, repairs, seller concessions, and closing timelines. You also have less pressure. You can inspect thoroughly and make thoughtful decisions. You can see the home twice or maybe even 3 times before you make an offer. This change benefits buyers who want a thoughtful strategy, not shopping for houses like it's speed dating. Now let's talk about those mortgage rates for 2026. They aren't falling off a cliff, but they are trending in the right direction. Interest rates are influenced by broader economic signals, including the Federal Reserve policy. And the Federal Reserve statements and economic indicators do indicate a slower but lower rate trajectory going into 2026, with fewer aggressive hikes and more measured easing. You want to know what I think? I think we're going to hover right around the mid to upper 5s for a while. But why does lower rates matter anyways? Well, the lower the rate, the more purchasing power you have within the same mortgage payment. So as rates decline, more buyers will enter the market, and just like your middle school economics lesson, supply and demand. So if supply is high and demand is low, more negotiation power and lower prices. But if demand is high and supply is low, well, those prices are going up. So the bottom line is this: buying real estate in 2026 isn't about chasing the perfect moment, but it is about understanding the market, how appreciation builds wealth over time, why inventory gives buyers power, and how mortgage trends can improve your purchasing position. This is the market that favors educated buyers who make thoughtful, strategic decisions. And that's you, right?